Welcome to another edition of Multimillionaire Forum. And for all friends who want to join on YouTube later on and through the live streaming, this is a monthly little event that we have where we bring out a topic and we try and talk about it, share some knowledge and information, completely free, and there is no recommendation of any sort. So just sit back, enjoy, and we'll speak for about half an hour to 40 minutes, and then we'll have a little discussion around it. We couldn't have found a better day to do it. Incidentally, just 2 days back, day before yesterday, all these tariff measures were finalized and announced. And very honestly, we were really thinking that Donald Trump is using this as some sort of a stick, saying, come, everybody sit down with me and negotiate. And let's figure how we can do business in the years to come. So we were really hoping that, things get reversed and, then ultimately he says, okay, it doesn't matter. Let's get on with life and all that. But he's Donald Trump, right? President of America, the largest and the most powerful nation on the earth. So which is why if he says that I'm going to levy, $100 tariff, and if 100 is not enough, then at least 50 should be a negotiable number. And that's exactly what they did. They did something like that. They said if India is going to charge us 52%, we'll do 26. So they've done 50% of the tariff. But let's find out. Let's actually get into it, and let's actually start from the basics for some of us who don't know anything about what a tariff is and how does it affect trade and so on and so forth. So let's just go absolutely to the basics, build it up, and let me also share with you what we're going to talk about today in a little bit of a sequence. Okay. Okay, here's a disclaimer. Sorry, I did mention it very, very briefly that this is only only education. There's no financial advice of any sort. Right. So what we're going to talk in terms of the subject today is the trade tariff. What it is exactly and what is the rationale of having this thing, the kind of impact it has on economic policies around the world. Some real world examples, if we have the time, we'll cover that also. And then we'll talk about some of the potential future scenarios, etc., which can emerge. I mean, there is a lot of speculation. There is a lot of conversation which is happening around what should happen, what should not happen, what will be the outcome, and things like that. So we are going to have a little discussion and debate around that as well. Okay. So let's get on. So, on a very, very basic level, think about it this way. I am a buyer, okay, and I'm talking about the left side of the panel. So just focus all your attention. Let us say very simply, this is me. Okay, can I annotate? Yes, I can. Just a second, please. Okay, this is me. Okay, let us say I am a buyer who wants to purchase some imported goods. A very simple example, this Apple iPhone, right? This is an imported good. Apple is not an Indian company, it's a foreign company. So I want to buy this imported good. Now, the seller country, which is America, and the seller company, which is Apple, are both happy to come and sell it to me. I, as a buyer, I'm ready to spend the money on that product. But what then happens is suddenly my government, which is the buyer's government, comes around and says, okay, you know what, you want to buy a phone or a product which is made outside this country and not in India, then let's do something else. Let's also charge you a little bit extra. So if the product, let's say this phone, if it costs $100 in America, why should you pay the equal of $100 in rupees? You should pay a little more, okay? Because you're a citizen of my country, and because you're buying a product which is coming from outside, what I'm going to do is that I'm going to charge you a little extra. So what they do is they don't exactly charge me extra. I mean, I, of course, pay the GST and all of that. But what they tend to do is that they will basically do a situation by which they will charge the American company or the importer. So there's some company which is exporting, say Apple is exporting, but there's an Indian company which is importing that good into India, right? So they will charge that Indian company something by which that extra little that thing that they're going to charge will get transferred to the Indian government. And that is the Indian government also trying to have its little pound of two bit pounds, if you like, in the product that I'm going to buy. In a very simplistic format, that is exactly how tariff basically works. So when I, as a buyer, want to buy something, a foreign product, okay, it comes to India, fair enough. But the company who brings it, the importer, he'll have to pay a little bit extra. The American company will have to pay a little bit extra. And that's basically how tariffs, in a very simple format, work. Okay. So now let's look at the other side of it. Okay. So that was me. Now the other side is I am a producer of and IT and technology is the best example. As in India, we export goods also. We export a whole variety of goods, but let's talk about, let's say, a goods or a service as a combination. So a seller in India wants to sell goods in a foreign country. The foreign country and the foreigners are ready to pay for that service, but just the way on the importing side, when India charges tax, the foreign government also wants to charge its 2 bits of tax on that. And ultimately, see what happens in this whole arrangement is that the foreign government also charges. So, which means I, as an exporter, will have to pay that money to that foreign government first. So, if I'm selling a product, let's say a software, or if I'm selling a leather good or something like that to America, I will have to sell it, but before I even bring it onto America, I'll have to pay some tax to the American government, which is the tariff, okay? Or the American importer will have to pass on that tariff. I mean, the modalities are not important. It's important to understand, okay? So, what is the end result of all these tariffs? Ultimately, think about it. It's a very funny situation, okay? Ultimately, it's the end user, which is you and me, who are bearing the brunt of this tariff, okay? Because what happens is that product or that service becomes more expensive for you and me as a consumer. So this is a very strange sort of a war. It's not a war or a trade war wherein I will fire a missile and then you will fire a missile back, or I will drop a bomb in your country and you drop a bomb into my country. I will fire across the border, you will fire back. It's not like that. It's a very funny situation. Okay, what happens is I will charge you a tariff of 25%. But when I charge you a tariff of 25%, it's like I'm digging my own hole. It's like Sheikh Chilli. Remember the Sheikh Chilli story where you're sitting on the, branch of the tree and you're chopping the same branch. It's something of that sort which is happening. This tariff is a very funny thing because when America says, I will charge you a tariff, what happens is American consumers will have to pay more for that product or service. And then when there is retaliatory tariff, right, like what we saw last evening, what suddenly happened is China came back and said that, okay, if US is charging us tariff, China said, we are going to charge you 34% tariff. But hey, wait a minute. It's not some sort of a tank which is moving across the border. It's a missile that they are firing. They are saying we'll charge you, but they are digging their own hole, and their own hole in the ground. The Chinese consumer will have to pay 30% extra. So it's a very funny scenario. You want to sell in my country, you will have to sell the goods higher to my customers, to my citizens, and they will pay a higher bill. But very funny, right? Seems completely absurd. But this is the crux of this whole tariff business. Okay, let's go back and understand a little better. I know some of you might get a little shocked also, rattled also, thinking that, okay, I mean, then who is it really benefiting? Actually, it's just benefiting the government, and it's a political thing. Okay, it's a geopolitical and geo-trade kind of a thing. We'll go forward. Okay, let's understand the rationale. Okay, let's go. Okay, this is very interesting. What is this? Okay, this is saying that tariff is not something new. This picture has been included to say that, for the last 100 years, these kind of tariffs have always been around. And this is an American chart for global investors in America, which says that America has always charged all these kind of tariffs, and so has all the world. I mean, India, America, Vietnam, Japan, China, all countries charge tariff to each other. Okay, but they are saying there was a prediction that this is going to be the highest ever, and this happened a few days before. So before Trump took office and all of that. So now it is actually clear that it's been the highest and the largest sort of charge that has ever happened. Okay, let's understand why this charge happens. So what happens is the government has a duty of doing governance, of course, right? But at the same time, they also have a duty to promote trade and protect their own country, right? Not only from a defense point of view, but from also from an economic and industry point of view. So let's understand this with three broad themes, okay? That what is the rationale for imposing a tariff? So if you have to protect your domestic industry, then tariff will make the imported foreign goods more expensive. So the example that we have taken is Maruti versus, let's say, Lamborghini. Very simple, okay? Now, uh, Lamborghini is going to pay a certain amount of extra charge. So maybe the manufacturing cost of Lamborghini is, say, $100. But when we as an Indian want to buy a Lamborghini, we'll have to pay much more, maybe $200. Okay. But because if Lamborghini was sold at 100, and let's say our own Maruti was also being sold at, 120, we would of course buy Lamborghini because maybe it looks nicer. It's a more sophisticated car, or maybe my Maruti versus Mercedes. I mean, just a comparison. Okay, but you get the essence, right? So we don't want our local goods to become so cheap that we only don't buy our goods, right? So what happens when we don't buy our own goods? What will happen is that industry will start sort of tapering down. It will start falling. People will lose jobs, etc., so on and so forth, right? So the government has a duty to protect the domestic industry, which is why you are a foreigner. You want to come to my country? Fine, come, but I'm going to charge you more, for selling it. Ultimately, my citizen will pay, no doubt. But whatever you collect from my citizen will be as a government, it will be my extra tax. Okay, see how this game works. Acha. Then let's come to the next part. Necessity. Sometimes the goods are just not manufactured in that country. So a perfect example is pharmaceuticals. I mean, see, India is known as the pharmaceutical laboratory of the world, right? We are one of the biggest exporters of pharmaceuticals, bulk drugs, and ingredients, and all of that. So if a country doesn't manufacture pharmaceutical goods, there is absolutely no choice but to import from a country that manufactures. Example, India. So, I mean, let me give you a very simple example, okay? And quite shocking, actually. Many years back, I used to work in Indonesia. And what used to happen is, of course, I had my team with the local Indonesians, and working together on a financial project. And one of these girls comes to me and says, "Hey, can you do me a favor when you come back from?" And during our journey, we used to keep coming back to India every now and then. Okay, so every 2 months we would come back to India, take a little break for a week, and then go back to work, right? Because it was a job where you had to be at the client site, almost for a year's time. So obviously, you want to miss your home, you want to keep coming back. So this girl comes and says, "Did this strip of tablet that she brought along?" She said, "This is manufactured by an Indian company." Okay, and can you bring it? Can you sort of bring some strips of this medicine back for me? So I said, "Yeah, sure. What's the big deal?" I mean, and I was very surprised. Why is she even asking me for such a thing? So I said, "Okay, fine. I'll just get it. I mean, no big deal." And then, I mean, before I could even think all these things, she continues and says, "You see, the charge here is 40 rupees." Okay. And I'm talking about 15 years ago now. Okay. So the printed MRP on that strip was 40 Indian rupees. She obviously knew the conversion rate. Those days, $1 was equal to 40 rupees. By the way, 40, 50 rupees, something like that. And she said, "I have to pay 10 times this amount in our local currency." I was like, how can that be possible? Because I mean, I had very little understanding of all this, right, of those days. So I said, no, but it's 40 rupees. 40 rupees equal to $1. So you should also pay $1. Why will you pay $8 or $10 kind of an amount? She said, no, but this medicine is very expensive in our country, which is why I'm asking you if you can bring it. Okay. So that's the time, I understood that, oh, governments charge each other so much of money. So that's basically what's happening. So then there is another reason, goods are sometimes cheaper to manufacture outside. I mean, for example, if you had to train American people to become engineers and then sort of work on the technology that they need, it would be so much more expensive versus then you have in India, you have, Sri Lanka, you've got Bangladesh, you've got Southeast Asia, where the cost of labor, basically paying salaries, is much lesser than what you would pay to an American counterpart. So there are advantages. Example, technology. That's how we become the biggest technology exporter to the whole world. And if there are tariffs that apply, then technology industry suffers in a very big way. Correct? So that's what happens. Okay. Now, the third and the most important part, this whole tariff business, tariff, visas, trade controls, customs duty, all these things are what? These are methods and tools for the government to generate more revenue. Every government needs revenue, right, to do its activities, because they need all this kind of stuff. Therefore, they levy all these kind of tariffs. Okay, just for your information, did you know how much tariff we pay on luxury cars and watches in India? Let's just open it. Can you bring us that link, please? You may have to you know just go to Google and do a Google if the link doesn't open directly. Okay, yeah, there it is. See, in India, luxury cars with a CIF, cost, insurance, and freight, value exceeding $40,000 attract a 110% import duty. $40,000 means in today's exchange rate, say take it 90 as a round figure, 9 fours are 36. So a car which is more expensive than 36 lakhs is going to cost you double. Okay, 110% import duty. Can you imagine? Now, see, this import duty is disguised. Can you just zoom in a little bit here? This is actually, there is a justifying reason. So they say that 70% is a basic custom duty, as you can see written there, right? Can you zoom a little bit? Yeah, thanks. Then the government is telling the foreign partner that, see, 70% is our basic custom duty. You want to sell your luxury car in India, you're going to pay this much. Okay. Okay, on top of that, we're going to charge you a 40% because we need some money to develop our agriculture, infrastructure development. It could be anything. Okay. It could be we want to build roads, we want to build trains, we want to do infrastructure. So you have to give it some name, some label under which you will charge. Important thing is it's 110%. Okay. Now this is for luxury cars. Watches का भी दिखाओ. Do you have something ready on the watch thing? No, it will be in another. You'll have to do another search. Okay. So just do a import duty on watches in India. Just see, check it out, have a look. What I'm trying to establish is it's not only just it's just not America who's doing that. We also charge a lot of duty. Okay, it's potentially reaching 49%. This is the kind of duty that we have. So anyway, come back to the presentation. So the point that I'm trying to make here is that everybody charges tariff to each other. Everybody charges some amount of levy from one country to another. So the important thing is, wait, just hold on. When the demand goes too much, like all of us want Apple phones, for example, everybody. Then what happens is that country becomes smarter, saying, oh, they also know, oh, this is so much of demand that you have, then let's negotiate and let's we will want to have higher tariff because, obviously people are crazy about using Apple phones. So let me charge you a little more on that. Okay. But then that's the time also the user or the importing country will think, why don't I try and manufacture this myself, so that let me save some costs, and that will create jobs for people in my country, and that will create more employment. I will also look very nice in my own country. And that's the rationale of the reactive or the prospective reaction of a tariff. Okay, let's move forward. So America's unique problem, okay, America has, to our mind, and some analysis that we did, it has this three barriers. See, everybody knows that US faces a major challenge. Stay with all these Google things in the background. Just keep it all ready. This dead clock and all that. Okay. So see, they have a very big problem. The debt clock, and there's a clock, by the way. Okay, what is the US debt? Well, US ka kitna loan hai at this point in time? 37 trillion almost. Okay. And there's a clock that they have, US debt clock, and very interesting. So they are continuously printing money. It's the largest borrower in the world. Okay. So it's got so much more money. Just think about it, that you earn like 500 rupees, but you have a loan of 500 rupees. Just imagine what's going to happen. America is such a situation. Okay. So America has taken so many loans from the whole world, and then they've used that money to buy things. That's how they become the largest buyer. So here are some numbers for you. $3 trillion of imports, okay, and services as 0.8 trillion. So in a year's time, American consumers buy almost $4 trillion worth of goods and services, which is equal to, by the way, the GDP of India at this time, more or less. Okay, 4 trillion. Imagine, I mean, countries don't produce that much in the whole year, and USA consumes that much. Okay, US's GDP also, give me the number if you guys have it from the background. Just announce the number if you have. Then the revenue that the government makes, the American government makes, is about 5 trillion, and every year they spend 7 trillion. Out of the 7 trillion, imports and services are 4 trillion. So just imagine. I mean, it's crazy amount of expenditure. And every year they have a deficit of 2 trillion. It's accumulating. Somewhere America wants these dollars to come back. So this is also happening. Now I'm going to give you, we are coming to this point where I'm going to show you the absolute heart of this presentation, So you will understand exactly a tariff mein actually ho kya raha hai. Okay, so USA wants to do 2-3 things, okay? Wants to bring these dollars back. They want to keep US as the primary currency for all international transactions, etc. And they want to control trade, right? Because it's the powerful country in the world, most powerful. Now, let's look at USA's imports, what they do. This is a very interesting data that we got together. Okay, show me the import data.
The GDP as of 2024 is 29 trillion.
29 trillion was the GDP. Yeah. 29 trillion people, 29 trillion GDP, and the deficit is 37 trillion. So just imagine, you have far more loans than what you can afford. Okay. Now, there is too much of numbers that you're seeing. Just come straight down to the sheet. Okay, very simply, can you first just zoom a little bit? Let me just I'll make it very easy for you. Okay, there's too many numbers, but don't worry about it. Zoom even more. Do a control plus. So just go on your slider and zoom a little more so that people can just understand the essence of what this slide is. And go to the topmost rows, please. Okay, zoom a little more. Zoom a little more. Yeah, and go on the topmost rows. Okay, so what this is saying is, 1 second, I'll just activate my annotations also. Okay, so this is basically saying that Mexico exports all this and America imports all these things on your left. These are the commodities that are getting imported. Okay, USA is importing. This is USA imports. USA. So this is US's imports. What is it doing from Mexico, from China, from Canada? So obviously these countries are exporting and US is importing, right? Very simple. Okay. So now, as you can see, for example, in terms of machinery, nuclear reactors and boilers, number one category, America is importing close to $438 billion worth of goods. Acha, which is fine. What is interesting is Mexico and China are supplying 50% of this. So 1/4 of America's machinery, nuclear reactors, boilers, all the equipment that is coming in this category is coming from Mexico. Just think about it. Acha, look at these vehicles other than tramway and railway. Okay, look at this. USA is importing 366 billion. Out of that, a third of that, I mean, more than a third of it, Mexico is supplying. Just see the dynamics, okay, you get the essence of it, right? I'm not going to go more into the details of each of this number and do all of that, but now let's go to the bottom. Okay, let's talk percentages. Okay, so now you understood what we are talking about. Oh, okay, ye total zara figure dikhao to. I can't see this number. Can you just expand that column a little bit? Yeah. Okay, so great, thank you. So this is data, I think last year's data. This is showing 2,755 billion of, which is basically 2.8 trillion. Okay, it's a lot of money. Let's not convert into Indian rupees to figure out. Let's just talk in terms of percentage. That way we'll be able to appreciate what's going on. Okay, so from the total amount that USA is importing in a year, okay, Mexico is supplying 19% of that goods and services. China is supplying 17%, Canada 15%, and this whole of European Union, Europe is supplying 19%. So you see, 19 plus 19 is 38, 38 plus 17 is 45, and 10 is 55, 60. 70% of America's imports are happening from Mexico, China, Canada, and European Union. Okay. Why is this important? Because USA is, in a very unique situation today. USA is fighting a war with the whole world. But on the Indian side or in the Canadian side, it's only that country. We have to only worry about the US tariff to us. But USA has to worry about tariffs around the whole world. Now, this is their, see how serious the situation is. Huh? So if Mexico is supplying 19% of your goods and services, and now you are going to apply 25% tariff on Mexico, which means what? Like, this data, by the way, is taken from that number. You remember? I mean, I think all of us have seen this in WhatsApp. President Trump was holding like a little bit of a placard from that Rose Garden where he was doing a press conference. And those are the rates which are published there. So we've just copied the rates. So he is levying a 25% tariff on Mexico, or for a country which is supplying 20% of its requirement. Let me repeat that. He is charging a 25% extra charge on Mexican companies who are supplying 20% of America's requirement. Okay? And American citizens will have to pay this one. Obviously, somebody has to foot the bill, right? Maybe some subsidy, 2-3%, 5%, maybe the Mexican government will absorb, Mexican companies will absorb, but ultimately, large chunk of it, the American consumer has to pay, right? So in that sense, China, now he has levied, as you can see, 34% tariff. I mean, think about massive. China, see, 17%, we're just rounding it off to 20, just for argument's sake. Okay, the same thing again, European Union, 19% of its goods are coming from Germany, Switzerland, France, Italy, Ireland, Netherlands, and Belgium. So they have to pay a 20% tariff. Now, do you understand what is happening? Okay. America is levying all these tariffs on its trade partners, people who are supplying goods and services to America. It's kind of a little crazy, you see, because the American consumer has to bear all this bill. He has to pay all this money. What happens when, and very, very simple logic, what happens when in your country, in your locality, if prices rise? Inflation. Inflation then does what? Recession. So there is a whole new theory also which is floating about. Just today morning, a friend was kind enough to send me something on WhatsApp. I don't know whether that is right or wrong, but logically and economically, it seems all right. What that article really said is that USA is using this whole tariff game as a strategy, as a major strategy. Why? Because US has to go into recession. This is what the article said. By the way, I'm not saying this, nor is this my analysis, this particular section. So they are saying that USA has to do a forced recession. USA has to go into a recession. Why? Because USA owes so much of money to all the world, especially China, Japan, etc. Right? They want the interest rates to come down. So when there is recession, when there is inflation, recession, when it's a bad time, the government does a little bit of activity. The central bank, what they will do is they will say, let us reduce the interest rates. So we are giving more money to people. Come on, people, borrow a little bit and spend. So the economic engine moves. It's a short-term measure, not a great idea. But anyway, that's the idea. So that is what is happening. And there is a lot of refinancing of loans, which is going to happen in 25 and 26. So that is also one of the reasons. Which there is a story. This is a theory which is playing out. I'm probably right also. So logically, if you have money, if I have to pay 5% interest, and if I save even 1% in interest cost, I save billions of dollars, right? So that's basically the play. Okay, let's come back to our presentation there. Let's move on. Okay, so you understood that the imports that America has is huge. This is by the way the same slide that I was talking about. This is that card President Trump was basically holding. I'm not going to go through all the announcements. I mean, every day and every time we open our phones and we take our phones in our hand, there's some notification. There is some announcement that is happening. But think about it this way, and I like to play devil's advocate. What if America has some more strategies? It looks chaotic right now. It looks like there's no sensibility. There is some announcement that comes in, and then after some time, after a couple of days, some other announcement comes in. So, but what if there is a method to all this madness? Okay, what as India, what are we talking for the last few years? We're talking about Atmanirbhar Bharat, right? We're talking about self-sufficiency. I mean, so why are we looking down upon US if US is actually talking about becoming an industrial powerhouse? That's what they want to do. That is what the election campaign for President Trump has been. They want to become an industrial powerhouse. They want to start manufacturing. See, we all know manufacturing doesn't happen overnight. Okay, suddenly you announce that I will, charge extra to automobile imports coming in from Mexico and from China and Japan and all that. But you're not going to be able to manufacture something overnight. Oh, by the way, do you have the skills? Do you have the engineers? Do your people want to work? Because for so many years, pretty much you are importing most of your requirements. So if you're importing most of your requirements, your manufacturing is actually down in your country. So I mean, there are a lot of such issues, social and otherwise, and economic and business issues. But anyway, so this is what they want to do. So now, in light of this, let's sort of move forward. Let's try and understand what we can expect. I mean, what will happen in the next 3 months to 6 months, etc. Okay, so. Uh, the first part we've obviously seen, we can see that there were massive tariffs. This part has happened. Okay. We were hoping that he would not do it. We were hoping that on the Liberation Day, 2nd of April, they would somehow, try and say that, okay, all the negotiations are done and, let's go home happy and that kind of thing. But it exactly didn't turn out that way. The other thing is we are seeing already reciprocal tariffs and retaliations happening. Okay, now look at this. Canada and China are forging strategic ties. See, this is something which is bound to happen. Okay, Japan threatens to dump US debt. Dump US debt meaning what will happen is they'll dump a lot of US currency. See, because nobody wants to bear the brunt of higher costs. So when they start selling dollars that they hold, what will happen to dollars? When there is more supply, what happens? The price falls. No? So dollar might become cheaper today. And actually, we saw that little happening, right? Dollar actually came down from 85 to 88 to 85. And a lot of you pointed out, oh, suddenly, how is Indian rupee gaining? But it's not Indian rupee gaining, it's dollar which is falling. But what if it falls down to 65 rupees in this kind of mayhem and carnage? We don't know. But these are some uncertain things. There is massive uncertainty, obviously, that is happening from an economic point of view. Can't do anything about it. Now this is something very interesting. Okay, there's going to be what happens when there's a bully in the classroom and when you as kids, the other people gang up against that bully, right? So you might see a lot of this kind of stuff happening. You might see a lot of global collaborations happening, and some smaller countries might become trade havens, the way we have tax havens, where we have to wait and watch. Okay, this is just crystal ball gazing, and I'm gazing this with you, and we'll discuss this thing while we are talking in a moment. But just the way today we have tax havens, we might have trade havens. So there is a country, say country X, on which there is no tariff from USA, and country X has, let's say, no tariff with India also. Just giving an example. So what we do is we export to country X, and X will in turn export to America. So basically, nobody pays the tariff. So people will do all these kind of people will try and figure out ways and means of bypassing the tariff and doing some sort of an arrangement, some sort of an alliance by which they can, American consumer can be protected. See, because ultimately, American consumer getting protected means what? There is a company in America who has to import. Let's say they have to import textiles. By the way, this news also just came in the last 24 hours. They have to import textiles. So what they're going to do is, if they figure that textiles is going to be expensive from some country X, they will start looking country A, B, C, D, who will supply them textiles or who don't have this tariff issue. That kind of a thing. Oh, by the way, there's another very interesting thing that might happen. It might be interesting. Maybe that's what they want. Maybe that's what they don't want. I don't know. But we were just discussing in office and we thought, we might even see some global shift in manufacturing. Just the way India was giving incentives to foreign companies, come set up your office here and set up your base here, set up your call centers in India, and you can have a cost-effective way of of delivering your service. It's the same way we might actually have production units. I mean, it's very simple. By the way, that creates jobs in America. Indians, relationships are better, trade relations are better, etc. Some point of time, there could also be a situation where, what happens when people fight. A lot of times people fight. So finally, they get tired and say, forget it. Both the parties are, tired. So maybe you will see a utopian thought, maybe a zero tariff or a very low tariff world also might that kind of a world order might also basically emerge. So there are a lot of things that can actually happen in times to come. Very quickly, before I open the floor, what I want to do is, do we have any more slides left? Just put it up if there's any. And I want to show you some amazing stuff that is happening, okay? I mean, it's not very nice, of course, but I'll show it to you anyways in just a moment. Okay, just stand by with me. Oh, by the way, yeah, markets are going to and dot dot dot. So Trump predicts that there's going to be a boom after the worst stock market crash. So obviously he knows. Like I said, yesterday was absolute mayhem. And in continuation of exactly the same thing, can you remove this? Can you put up trading view? Can you show everyone some charts? Put up trading view. Let's show everybody what's happening in America. Show us S&P, show us Nasdaq, show us Dow Jones Index. Okay, I mean just look at this. Remove your moving average, please, as well as the parabolics. Okay. And yeah, can you just draw? Can you just shift your line a little bit lower? I mean, here. Look at this. Sorry. Yeah, yeah, at the bottom. Exactly. You know what we are trying to do. Just a second. This, yeah. Okay. This can we all see this? This particular line here. What this tries to say is that the price of the American stock market, this is the index. The index itself has come down. This is Nasdaq, has come down to a level at what was this date and what was this date? Can you please tell us? This is January 24. Yeah, I can see that. And this one of April 24. So it's basically in 2-3 days. We are today in the April of 25. We have just reversed the clock by about 15 months. So today we are able to buy the same American market at these prices. Okay, companies have not shut down business. Countries have not shut down business. Apple is now going to start to stop their selling of their iPhones. Microsoft is now going to stop selling their software, and likewise all the other companies that we have and which we know. Google is not going to stop its services. We are using Google Chrome's browser right in front of you. So some of these services are not going, but everything is down. We are not going to stop using these services, but the truth is in front of you. Let's look at S&P. So basically, how much is this down? By the way, look at S&P. Just measure how much is it down from the top. What is the fall percentage? Can you please tell us? Just measure. Yeah. Yeah, is that one? Yeah, just measure it and tell me how much is it down. 18%. So 17 to 18% on the index, which means the individual stocks would be down at least 1.5 to 2 times, or sometimes even 3 times that much down. So again, this price of today, and maybe the market might continue to go down a little bit more. Who knows? We might come to a price level of what is this? What is this area? July of 23. So imagine we'll go back 2 years in history. I mean, this is like a massive discount on the American stock market, by the way. And American stock market means the story is the same in India also. We showed Nasdaq, we showed SPX. SPX is their main index. It's like their Nifty 500. Okay, SPX 500 is their index. So in the same fashion, let us quickly look at some of our indices. Let's look at Nifty. Nifty भी देख लो. I mean, have a look at Nifty. Nifty has also fallen almost now 18%. Okay, as we can see, Nifty down. Come to 200. 200 is a much better index to see because it gives you the real picture of what's happening in the country as an economy. So this was also down 19%. We went up in the last few days, but again, it seems that it wants to come down a little bit. So nothing to worry. I mean, see, it's not even a 20% fall. Exactly, the market is not even down 20%, from the top to the absolute bottom. But in our minds, there is too much of mayhem, and the mayhem is more in the mind, more than actually being in the market. So it's not so bad. It's probably a very, very interesting, very, very good opportunity to invest at this point of time. You're getting mouth-watering prices and valuations. Go down to mid cap and small cap. Let's just show them this index also. Okay, similar situation with mid cap, 23%. Yeah, small cap. Small cap is like the future of India. This is where India is growing. This is what is sort of pumping in complete steroids into the Indian growth engine. This is the area which is really growing. This is the area which is making a big difference. This is the area that is bringing all the GST. This is the area which is bringing in all the income tax and the corporate tax for India. This small cap here, okay? I mean, it's down. And how much? It went down from the highest point to 27%. See, here, this is where some of us, when we were talking, we said that, correction is mostly done because it's come to such a level that these levels it had way back in 24. So it was 15 months back we were at these levels. So it's come back to this level, which means, from a from a general and from a technical point of view, we think that the correction should be over, and rightly so. It started moving up, but before things could actually stabilize, and before it could move here and then here and then here. Of course, it doesn't move like that. It moves in a slightly different fashion. By the way, I've said this lots of times: up and down and up and. I mean, this it has a wave pattern, but this is basically what we were expecting. Uh, we're still expecting the same. That nothing has changed there. But what will happen is this is a little bit of turbulence. Maybe a little down we'll see, and then maybe the direction will reverse upwards. Okay. But this is the opportunity, friends. This is the massive opportunity. Okay, now let's look at some of the sectors. Let's see what's happened to IT. Obviously, IT would have been dramatically hit. Please pull it down. Information technology is almost down 30%. Look at that. Okay, let's look at the infrastructure. Let's look at what's happening to Indian infrastructure. I mean, there is opportunity, and pockets have opened everywhere. 27% down. Well, let's look at pharmaceuticals. Okay, pharmaceuticals are down about 6. No, this you need to drag down you a little bit more, and then we'll know. Pharmaceuticals corrected by about 18.5%. Okay, what else is there? Energy. Okay, energy sector. This is again the future of India. I mean, we are going to become. We've even done talks on this subject, right? Where we've said that India is going to become the Saudi Arabia of energy in the world, because we're going to produce so much of renewable energy, and this is on the agenda. This was on the agenda for the last 5 years. This is on the agenda for these 5 years. So let's not lose sight of all these things. 35% this sector has fallen. A very, very huge sort of a correction in the energy sector. And all the stocks and funds in the energy sector have become so much more lucrative and so much more mouth-watering in terms of buying. So we have the money to, we've always advised that having a little bit of cash, and all the new cash, the new SIPs can flow back into this. So just to give you a sense of, opportunity is emerging. It's a bad time. And we have some of the experts like Warren Buffett who always say this, right? Buy when there is absolute blood and fear in the market. So this is the time there is blood and fear in the markets, and we should really go and try our best to build up a little bit of a portfolio for ourselves.